changes to Social Security. So there was a lot of talk about changes to Social Security when President Trump was running for office. He talked about two things: no longer taxing Social Security, not taxing tips. So the One Big Beautiful Bill Act does not, unfortunately, change your Social Security's taxation. Social Security is still subject to tax for most people. So there's no changes there, unfortunately. And I've talked about it in past episodes, but the way that you determine how much of your Social Security is taxable is you take your adjusted gross income plus half of your Social Security. And if you're a single filer and that number is below $25,000, then none of your Social Security is taxable. If you're a joint filer and you're below $32,000, when you do that calculation, then none of your Social Security is taxable. If you're a single filer and you are between $25,000 and $34,000, then half is included in your taxable income. And if it's under $44,000 for a joint filer, then half's included. And then when you're over $34,000 as a single filer or $44,000 as a joint filer, then 85% of your Social Security benefit is counted towards your taxable income. So this doesn't change. And if you're able to stay underneath these thresholds, obviously it can help you because your Social Security is not taxable. So unfortunately, there wasn't a change to this, but there's been a lot of information from the White House and from other tax analysis done, and it's stating that that's kind of the point of the 65 and older deduction, was to help seniors, to help reduce some of their taxable income by giving them this additional deduction. But unfortunately, it doesn't mean that now all your Social Security income is taxable. So you still have to be aware of this as you're planning about where to take your income from, and you're deciding, again, as I said, about Roth conversions, realizing capital gains, realizing that those things could trigger your Social Security being taxable.